quick trade recap. I took one trade today. It was a short on NQ. It's a textbook setup, an A plus plus model, A plus short, and so yeah, let's get into that. I also took this trade right here in HS session last night. It was a really nice trade as well, but I'll go over this in a different video. But basically, we had like an SMT. I mean, I'm not gonna get too much into this, but yeah, this was a nice trade I took yesterday in HS session. But this morning, I took this short right here, absolutely A plus, just textbook model. So yeah, let's low-key get into this. So going into today, overall, I was bearish. Now, why was I bearish going into today? So last week we actually ended up sweeping out the sell side level here that NQ's been working towards for a while now. This is also a monthly for value gap, right? And this is an untapped monthly, by the way. But what is the reaction of this low getting taken? The market starts to get bought up here, but a lot of the times, a way that you can kind of anticipate that this is going to happen before it does is when you look at how the market rebalances. Notice what we're doing. Notice what NASDAQ is doing when it's getting this rebalance. I mean, we're doing three things. Like, once again, why does the market move? There are four reasons that markets move: hunt liquidity, generate liquidity, rebalance to inefficiencies, and rebalance to equilibrium. Every single move on every time frame, on every asset, every forex pair, every stock, every commodity, everything is always doing all four of those things at every second of every single day. So we are hunting liquidity, generating liquidity, rebalancing to fair value gaps, and rebalancing to equilibrium. So when NQ gets this move higher, what are we doing? We are first rebalancing to this fair value gap, right? We are also rebalancing to equilibrium of this price leg. So that's two of the four reasons why markets move. And then last but not least, we are generating liquidity. Like I said a second ago, one way that you can look to see if like you can know before this bearish price leg here happens, you can know that this is likely to happen is when NQ does this, when we generate all of the sell side liquidity on the way up. So when we get this rebalance to equilibrium and the daily fair value gap on NQ, we're leaving this low here, we're leaving this low here, we're leaving these lows here, we're just generating sell side to then do what? We have this little rejection here, this initial sell off from the bearish price leg, from the bearish daily imbalance, and then the market just absolutely dumps here. So I was very bearish going into the day, and then we had this bigger time frame inversion here, so this big bullish for value gap here on the 4 hour gets ran through. So inversion for value gap here, just clear displacement lower. I was extremely bearish going into the day. Now at market open, what happens? We have a SMT at the previous, I believe this was New York PM session high. Yeah, previous day's high was like up here. But previous session high, previous New York PM session high, we have a bigger time frame bearish SMT with ES. So ES ended up sweeping out this high. If I go here, as you can see, this high here sweeps out this high. It doesn't on NQ. So bearish SMT going into market open. And then what is the reaction of this SMT? The market gets clear displacement lower here. And then if we go to like the 15-minute, as you can see, we have a change in the state of delivery here. So 15-minute change in the state after the SMT. And then at market open, I'm basically just looking for a rebalance into some form of key level to send us lower towards all of this generated sell side down here. As you can see, we've got low resistance sell side leading up to previous day's low. And then we've got the low of the range, which is also this monthly intermediate low from last week. So at market open, we get this move higher up into a 15-minute bearish imbalance, and then we also get a beautiful internal sweep, an internal stop right at market open. So here's market open here. Market immediately trades higher. We come and we sweep out this high beautifully. Now we don't tap this 15-minute. However, we do tap a 15-minute. So I had this marked out because this was like the most premium imbalance right here on NQ, but we don't end up tapping it, but we do tap this here and it holds. And then we also, as you can see, we tap the change in the state, which is this candle here. And then, like I said, we got that really nice internal stop rate. So once that happens and I see the reaction of this internal high getting taken is clear and obvious displacement lower, I mark out the 1-minute imbalance here, and that is where I end up going short once this 1 minute gets inverted. Now, I didn't short on the 2-minute inversion. As you can see, this didn't technically close, but I didn't really need to wait for that. Like, this was just such an A plus model that I just low-key slapped this as soon as it was like before I entered on the 30 seconds. So this candle, the 30-second candle closed somewhere around here. That's where I actually ended up entering my short, right about where my fill is. And then we get this rebalance to the 1 minute. It holds bearish, and then we get that really nice continuation towards not only previous day's low, and then all of this low resistance in between, but also, like I said, the range low, which is this monthly intermediate low here. And once again, this is an A plus plus setup. Now, why is this setup so high quality? It's very similar to the short from last Thursday. It's a short I took last Thursday. I think it was the 16th, gave a really nice short that was extremely similar to this. And like guys, these are the trades that you want to be like really sizing up on and taking advantage of because they're just so A plus. This is such a quality opportunity. And now once again, why is this such a high probability trade? Because bigger time frame order flow is extremely bearish. As you can see, like I said, monthly fair value gap gets tapped. We get the rebalance, but when we rebalance, we tap equilibrium of the price leg. We tap the daily bearish fair value gap here. This holds bearish. How do we know that it holds bearish? Because we get clear and obvious displacement lower. Big bullish 4-hour imbalance gets ran through, turning it to an inversion. And then what do we start to do? After this big displacement leg here from Thursday, or I guess this was Wednesday and Thursday, we end up getting, like, what happens? Market displaces heavily, and then we start to do what? We start to chop around. We start to accumulate here. But when we're accumulating, what are we doing? Look at the lows. What is the market doing? Remember, why does market move? To generate liquidity. That is one of the reasons that markets move. So when the market starts to chop around, we are generating low resistance sell side with these lows here, and then this low here, which is Thursday's low, which is previous day's low. And then pre-market, around the end of the London session, what do we end up getting? This really nice bearish SMT. So ES ends up taking out this high here, and Q does not. And like I always say, like, what do you need to pay attention to? Not just the SMT itself, but what is the reaction of the SMT? How does the market react to this SMT? We get clear and obvious displacement lower, change in the state of delivery here. Market opens. These bearish imbalances hold bearish. We get the internal stop rate. Like everything here is pointing bearish. This is such a clean model. And then for the entry model itself, you have the inversion here. You have the 2-minute inversion if you want to wait for that. And then for targets, we have obvious sell side draws here with previous day's low and then the range low. So yeah, really nice trade today. A plus model. There was also a really nice short right here that ended up playing out afterwards that you could have taken. Now this is really nice structure, but in my opinion, it's not as high probability as the first one, simply because the initial drawn liquidity is no longer intact, right? So once this external low gets taken here, this monthly intermediate low, then any short after that is a little bit less probability, but simply because there's not all of these targets. However, this was still a very, very clean trade that ended up playing out afterwards. We had a really nice internal sweep here inside of this bearish 5-minute fair value gap. So this was a bearish 5-minute here. We end up sweeping out a 5-minute intermediate high right here. So this high that gets put in, gets swept inside the 5-minute, and then we get obvious displacement lower. There's a 30-second inversion here, targeting the low resistance sell side here. So this was another really nice short you could have taken here. I was already off the charts at this point, but really good price action overall today. And yeah, that's pretty much it. That was today's trade. And I want to just low-key take a mental image of this trade here and remember the overall context. And like I said, remember, these are the models that you want to be really sizing up into when there's already a model on like the 1-hour or the 4-hour, and it's extremely obvious where the market's going. Like, look, pre-market this morning, this is what we looked like pre-market. Hang on, and let me go to the 15-minute and go a little bit more forward. So at this point in time, it's extremely obvious at this point that the market is bearish, right? We've got the bigger time frame SMT. We've got all of this generated, or we've got this low here, and then we've got all of this generated sell side here. SMT gets put in, and then what happens? Market displaces lower with a change in the state. So right here, it's extremely obvious that we are bearish. So once again, when you have a very obvious, recognizable model on the bigger time frame, and then you have an internal model that lines up with that model, so you have a model inside of a model, those are the A plus opportunities that you want to be taking advantage of. Now, how is this an internal model? Because we've got the internal low here, market opens, manipulates higher, stop rate, we respect the 15-minute, we get the displacement lower, change in the state here, 1-minute inversion. So this is the internal model inside of the external model here, and they're both extremely obviously bearish. So that was today's trade. And then last Thursday, it was a very, very similar setup, and I ended up taking this really nice short last Thursday. So for this trade, same exact thing. Going into this day, look at this. This looks extremely similar to what we were just looking at. Because it's painfully obvious here that the market is selling off towards what? Sell side liquidity, right? And what is happening? We've got a bearish SMT at the high, followed by what? What is the reaction of this SMT? Clear and obvious displacement lower. There were inversion for value gaps here. I believe it was on the 12-hour. There's a nice inversion here. Let me low-key, if I remember correctly, it was a 12-hour. Hang on. Yes, so this was a 12-hour bullish imbalance that ended up getting ran through here. And then at this point in time, what happens? Reaction of the SMT is clear and obvious displacement lower. but we don't end up taking out the low. We just generate sell side liquidity here, and then the market gets a rebalance here to equilibrium of the price leg, just like in the trade from today. So equilibrium gets tapped. Notice the hesitation to go higher here. We get the rebalance, but then market's just chopping around at equilibrium inside of this bearish 1 hour imbalance. Then what do we get? An internal sweep here, followed by clear and obvious displacement lower. Another bearish imbalance opens up here. Market holds this bearish imbalance, continues to sell off. At market open, what do we have? We have this untapped 1 hour with the obvious sell side draw on liquidity still intact. At market open, what do we get? Same exact thing that we got today, this morning. Hang on, I gotta fast forward like a half hour, but at market open, we get the exact same thing that we got this morning. We get an immediate move higher with a stop rate sweeping out internal buy side. So notice, what does the market do here? We sweep out this internal high here, and then we sweep out this 5-minute intermediate high. And keep in mind, all of this is taking place inside of this bearish 1 hour. And then we are also what? We are also at equilibrium of this bearish price leg. So if I measure from this high, okay, hang on, from this high here to this low, as you can see, the market, okay, we haven't tapped yet, hang on. Market ends up tapping equilibrium right, hang on, here. So, bro, seriously. So from this high to this low, market comes right above equilibrium. We are inside of the bearish 1 hour imbalance. And then this is exactly the same thing that happened in today's trade. We get an internal stop rate right at market open, followed by what? Clear and obvious displacement lower with the inversion for value gap. This is where I ended up taking my short last Thursday. It was like, I believe my fill was like right here. Had my stop somewhere up there, and I was simply targeting the sell side. Now, once again, what makes this an A++ setup? The fact that this is a clear and obvious internal bearish model inside of the already existent higher time frame bearish model. Remember, when you're looking at this here, it's extremely obvious that the market's going towards this low because we got the SMT at the highs, we got the displacement lower, we've got the 12-hour inversion for value gap here, rebalance to equilibrium of this price leg, rebalance to the 1 hour for value gap. This holds bearish, internal sweep here with turtle soup, displacement lower, clear and obvious bearish order flow, changing the state, bearish for value gap holds here, market opens, trades up into the bearish 1 hour for value gap here. We get an internal sweep at market open, turtle soup, followed by displacement lower, running all of the low resistance sell side, and then taking out the low, the external low here on the bigger time frame model. And then same exact thing as today. Market opens, manipulates higher, turtle soup, key level here, OTE of the price leg. What is the reaction of the internal stop rate? Displacement lower, inversion for value gap, targeting what? What are we targeting? All of the low resistance lows, just like in the previous trade, and then the low of the higher time frame external sell side draw, which is this low here. So for last Thursday, the draw was here on this sell model, and then for today, the draw was here on this sell model. So these are the trades that you really want to be taking advantage of when it's so insanely obvious where the market's going. These are the extremely high quality opportunities that you want to put risk on the table and take advantage of the fact that there's a very high chance the market is going to play out towards your draw liquidity. So yeah, really nice trades today, or trades, really nice trade last Thursday, really nice trade today. And then, like I said, I took this nice short in Asia session, but I'll go over that in another video. And yeah, I'll see y'all in the next recap.